All right, if you're self-employed here in the UK, you know that national insurance can sometimes feel like you're trying to solve a puzzle in the dark. But what if you had a clear, easy-to-follow guide? Well, that's exactly what this is. We've teamed up with the experts over at ProTax Accountant to give you the perfect roadmap for calculating your Class 4 contributions for the 2025/26 tax year. Let me ask you something. Are you self-employed in the UK and have that nagging feeling you might be paying too much national insurance? Or maybe even worse, you're worried about getting a nasty letter from HMRC because you've calculated it wrong. If you're nodding along, then stick around because you are in exactly the right place. Okay, so over the next 10 minutes or so, we're going to cut through all the confusing jargon. We're going to break down exactly how to calculate your Class 4 national insurance for the 2025/26 tax year. This is going to be a super simple step-by-step guide using all the latest numbers, and it's all been put together with the pros at ProTax Accountant. So here's a quick look at what we'll cover. First, we'll get to grips with what Class 4 NIC actually is. Then we'll figure out who has to pay it. We'll dive into the key numbers for 2025/26, walk through a real calculation step-by-step, and then cover how and when you need to pay. And finally, we'll touch on when it makes sense to get some expert help. Sound good? Let's jump. All right, first things first. What on earth is Class 4 NIC? Understanding the basics here is absolutely crucial because it's a big piece of the puzzle when it comes to your yearly tax bill. So, in the simplest terms, Class 4 national insurance contributions, or NICs, are basically a tax that self-employed people in the UK pay based on their annual profits. The key word there is profits. It's not like when you're an employee and it all just comes out of your payslip automatically. Nope. When you work for yourself, it's on you to work it out and pay it. The bottom line is, the more profit you make, the more you'll pay. Okay, now this next part is where a lot of people get tripped up, so it's really, really important. Class 4 NICs do not contribute to your state pension. I'll say that again. They do not build up your entitlement to a state pension. Think of it more like an extra slice of income tax. The contributions that do count towards your pension are Class 2 NICs. Now, the great news here is that Class 2 contributions were recently changed. They're not a mandatory weekly payment anymore. As long as your profits are over £6,845, you automatically get the credits towards your pension without having to pay anything extra. Understanding this difference is it's vital for planning your future. So we know what it is, but who actually has to pay it? Are you liable for Class 4 NICs? Let's find out. Well, the good news is, it's actually pretty straightforward. You have to pay Class 4 NICs if two things are true. 1, you're self-employed, and 2, your annual profits are more than £12,570 for the 2025/26 tax year. If you tick both of those boxes, then yeah, this applies to you. But wait, there are a few exceptions. You are exempt, meaning you don't have to pay, if you're under 16 years old, or if you were already over the state pension age at the very start of the tax year, and just to be clear, that means on April 6th, 2025. If you reach pension age partway through the year, you'll still have to pay for that whole tax year, so keep that in mind. All right, let's get into the nitty-gritty, the key numbers for 2025/26. These are the rates and thresholds you absolutely need to know. Everything else builds on this. First up is £12,570. This is your magic number. It's called the lower profits limit, or LPL. Think of it like your personal allowance for this tax. You pay absolutely zero Class 4 NICs on any profits you make up to this amount. It's your tax-free zone. Okay, next up, £50,270. This one's called the upper profits limit, or UPL. And it's super important because this is the point where the tax rate changes. Any profit you earn above this limit gets taxed at a different lower rate. We'll get to that in a sec. So what's the main rate? It's 6%. Simple as that. Now, you only pay this 6% on the slice of your profits that's between those two numbers we just talked about. So anything from £12,570 up to £50,270. For most self-employed folks, this is the main rate you'll be dealing with. And then for any profits you make over that £50,270 limit, the rate actually drops to 2%. Yeah, you heard that right. It goes down. This is only for the portion of profit above the upper limit. So it's a tiered system, right? You're not paying one single rate on everything, it's done in bands. So, to recap, here it is all laid out nice and simple. Up to £12,570, you pay nothing. On profits between £12,570 and £50,270, you're paying 6%. And for anything over that 50 grand mark, it's just 2%. This little table is basically your cheat sheet for the whole thing. Okay, theory's done. Numbers are on the board. Let's put it all into practice with a step-by-step calculation. We're going to use an example. Let's make Chloe. She's a freelance marketing consultant based in London, and this year she's made a taxable profit of £40,000. Let's see how it works for her. So, how much does Chloe owe? Let's walk through this together. Step 1. Her profit is £40,000. Easy. Step 2. We need to take away her tax-free allowance. So, that's £40,000 minus the £12,570. That leaves us with £27,430. That's her taxable profit for NICs. Step 3, we just apply the 6% rate to that amount. So £27,430 times 0.06, which brings us to step 4. Her total Class 4 NIC bill is £1,645.80. See? Not so scary when you break it down. Okay, before we do another one, I've got a brilliant pro tip for you, straight from the team at ProTax Accountant. Seriously, this one's a game changer. Set up a completely separate bank account just for your tax. Then, every single time you get paid, move about 25 to 30% of that invoice straight into your tax pot. That way, when the bill from HMRC arrives, the money is just sitting there, waiting. It takes away so much stress and stops you from accidentally spending it. All right, let's try a bigger number. Say a freelancer makes £60,000 in profit. Now, this is where it can get a little bit tricky, so stay with me here. Because the profit is over that upper limit, the calculation has 2 parts. First, we figure out the tax on the main band. That's the bit between £50,270 and £12,570. We work that out at the 6% rate, which comes to £2,262. Got that? Okay. Step 2 is the bit over the limit. So that's £60,000 minus £50,270. We tax that smaller amount at 2%, which is £194.60. The final step is just to add those two figures together. So the total Class 4 NIC bill is £2,456.60. So you've done the maths, you know the figure, great. But how and when do you actually pay it? This bit is all about the deadlines, and trust me, you do not want to miss these. The penalties from HMRC can be pretty painful. Well, here's some good news. You don't have to worry about making a separate special payment for your Class 4 NICs. When you do your annual self-assessment tax return online, the system actually does the calculation for you automatically. It just gets bundled in with your income tax, and you pay it all off as one single bill to HMRC. Phew! Okay, so what are the key dates you need to burn into your brain? Well, the tax year we're talking about ends on April 5th, 2026. Your deadline to get your tax return filed online and pay what you owe is January 31st, 2027. And don't forget, many of you will also have to make something called payments on account, basically paying in advance for the next tax year. The second one of those is due on July 31st, 2027. Seriously, get these dates in your phone calendar right now. Look, we've tried to make this as clear and simple as possible, but let's be honest, tax is rarely simple. So for our last section, let's talk about when it might be time to call in the professionals. There's a quote from the team at ProTax Accountant that I think just hits the nail on the head. It says, "Knowing the rules is half the battle. Applying them perfectly to save time and money is where an expert makes all the difference." And that's so true. A good accountant does way more than just fill in the boxes. They look at the bigger picture, help you claim every single penny you're entitled to, and can potentially save you way more money than they cost. Okay, just a quick and very important disclaimer here. The information we've gone through today is for general guidance only. Everyone's situation is unique, so please do not rely on this alone to make any big financial decisions. So for personalized advice that's tailored specifically to you and your business, we always recommend that you speak to an expert. And of course, the team at ProTax Accountant are the perfect people to help with that. You can get in touch with ProTax Accountant on WhatsApp or by phone at 07985 689 912. Or you can drop them an email at info@protaxaccountant.co.uk. If you want to read more about this topic in detail, head over to their blog. The full link is on the screen now. And finally, if this guide helped you out today, why not subscribe to the channel for more simple guides on tricky tax topics? Thanks so much for joining me.